In the last month or so, we have seen legends like Ken McElroy and Grant Cardone call their shots. On
Mm.
this channel, for the last couple of years, we have talked about the pain coming to the commercial market. In fact, I remember a video with Jonathan Twomley where we turned $100 million building into $48 million. People thought we were crazy, but alas, it is happening right now. So, what is Ken McElroy? What is Grant Cardone doing? And then more importantly, can you do that? Let's welcome the guys to the channel, and I'll tell you what they're doing. Matt, how you doing?
I'm doing super awesome. And you and Jonathan weren't that good at it because you only cut the building's value in half. That's all I'm gonna say.
That's all we did.
That's all I'm gonna say.
Should have gone deeper. Should have gone
Yeah.
deeper. That's funny. Dion, how are you?
Howdy, I'm doing great. You haven't said what Ken and Grant are doing. I think I know what you're going to say. I'm doing it. And no, I don't recommend it for the average person, if it's what I'm thinking.
Woo! All right. Well, here we go, folks. Undoubtedly, again, according to Ken, Grant, and myself, the pain is coming to commercial real estate, 5 units and above. So we just put a number on this, not residential. So not singles through quads. So let's get that out of the way. Because there is pain coming because of financing, short-term debt, variable rate debt, bad assumptions, stupid operators, all of that, you can buy some great deals. Grant Cardone has said, screw lending. I'm going to pay cash, and I am going to move forward on that in refi later. And then we have Ken McElroy saying, you know what? We are good operators. We are elite operators. We are going to take over Class A buildings and hold those until we grow out of this. So again, the pain coming to commercial is real. It is growing. Interestingly enough, in Phoenix, Arizona, according to Ken McElroy, if you bought in February of 2021, which was the peak, you were paying $300K a door. Today, $190 a door. So that's going to hurt. That's more than a 30% drop. That's all the equity gone. So again, guys, looks like commercial real estate is where the pain is. We already have some big guys making moves. We got Blackstone. Shoot, Blackstone, Jonathan Gray called the bottom 6 months ago. So Dion, what say you? Is the opportunity in commercial?
So I'm going to ask some sarcastic questions here because you are talking about exactly what I thought. We watched some of the same content, same videos on what they're talking about, what they're doing. Is Ken McElroy in the first 5 years of investing? The sarcastic question, obviously.
No.
Is Grant Cardone
closer to the last 5?
Am I
nice.
in the first 5 years?
No, you're not.
No. Right. So I, in 2023, purchased a duplex. This is something I never thought I'd ever. 40 years of my life I spent never thinking I'd be this person. I have $500,000 in the bank. I take $400,000. I buy a duplex all cash. I put $62,000 into a rehab. It's now worth $750 or so. I'm not that I'm going to buy something all cash person. So I would never recommend somebody think about starting that way. I would never recommend somebody in their first 5 years, because we've had great appreciation in the last few years, 1031ing right now into something big that they might not be able to handle, or have the portfolio to want a building with 10 units where all of your tenants come from the same economic drivers in one local place. So when we hear people doing things like, I made an appreciation play, great. If you have a huge portfolio and you did it with this much of your portfolio, it makes sense. But that's not me. And if you're brand new and you're in those first 5 years, and I watch Ken, I love watching Ken and Danielle. She's got 3 paid off properties. There you go. So even just talking about her and Ken puts that on my screen for some reason. But Ken has, like you, Zuber, he's got decades of experience. So I like his perspective, but I like her perspective blended together. When we hear people like Ken or Grant going, hey, I'm taking all this money, possibly syndication money, so other people's money, I'm going to buy stuff all cash. That's not us. That's not the people I think I'm trying to reach. The people I'm trying to reach. If you're in your first 5 years, yeah, it's slow. It sucks. Save a down payment. Buy the next rental. Hunt for the next deal. Change how you're shopping. Change where you're shopping. Change the asset class you're looking for. But unless you are in Grant's, and this is a weird sentence, Grant's, Ken's, or my situation of being past financial freedom and having a larger amount of money in the bank than you ever expected, yeah, that's the person who's going to buy something all cash.
I like it. I like it. Matt, what are your thoughts about what Ken, Grant, and of course Dion are doing?
I mean, if Dion's doing it, why not?
Yeah, exactly.
Duh. Yeah, I mean, I think, at the end of the day, you look at those guys that are of that size, right? the Grants and the McElroys. The fact of the matter is that they very often have access to a ton of cash. When economies goes bad, a lot of times that goes away on the business side, but it doesn't go away on the necessarily on the personal side.
Mhm.
The other thing that happens too is the GSEs, government sponsored entities like Fannie Mae and Freddie Mac, they also have programs for massive operators like that, where they basically say, hey, Ken is a known entity. He is an
Yes.
and so we have a troubled asset. We just want to keep on getting the payments that we're owed. Mr. McElroy, would you like an opportunity at this? This
Yeah.
is where Grant did a good job of talking about things before, where he said, I was too small to, and so I failed. And now he's far too big. And so what's the likelihood that he fails? The nice thing is these guys are so well known that even if they did start to fail, they could pick up the phone and call 10 different people and get some sort of an equity position
Yeah.
that would largely wipe them out or maybe drastically reduce, but it would still keep things alive. And
Sure.
so while all the trolls are out there waiting for the demise of, all these big, rich and powerful people, just know that they didn't get rich
Yeah.
and powerful being stupid and stay
Exactly.
poor like you. So at the end of the day, I believe that what's going to happen in this market, and as these guys continue to buy stuff for cash, we bought the police station for cash because we knew that we could get that job done. We could get that deal done. So think about doing those things like, we've done on a much smaller scale, but recognize that if it's in your first few years, of course you're not ready to do it. Of course
Yeah.
you're not. That's the
Yeah.
point.
Yeah. I love it because when I watched Ken McElroy's video about how he plans to buy $500 million. Yes, $500 million in real estate in 12 months. Wild. That's thinking big. So I think there's a couple of things in there. I think you're right, Dion. This is not for a lot of people in the first 5 years or any people in the first 5 years.
Mm-mm.
But I do think there's some signals in the noise that we should all pay attention to. So, I think you guys are all right. Nobody's going to be like Grant Cardone and writing checks for Class A buildings in Miami, which he has recently done. And he called his shot. Good for him. But let's go to Ken. I think one of the things that Ken is looking to do that's interesting, at least interesting to me, to Dion's point, not my first 5 years, is de-aging your portfolio. What does that mean? Ken, in that video, talked about a lot of his current existing properties are 80s builds, and he's looking to move up. What that means is he's going to trade 80s builds maybe for 2000s or 2010 builds, or even go new, right? Take over projects that are not yet finished, and he'll get them over the finish line. I think that's interesting. I think the biggest takeaway from Ken McElroy's recent discussion is just how many people the financial engineers are going to hurt, right? I've talked about financial engineers for a while not being operators. And the reason Ken is going to win is because he's an operator.
Mhm.
And I think there's a lot of stuff in that. Dion, you saw the same video, it sounds like. What were some of your takeaways?
The takeaway, anytime I watch somebody who's significantly further ahead in something than I am, is what would somebody a little bit further ahead than I am do? And that's the hardest thing when it comes to teaching somebody something, is forgetting what it's like to not know something.
Mhm.
Giving them just enough knowledge right ahead of them, instead of saying, here's what we're, because I've never made a video that said, I bought my last duplex all cash. Here's how you start in real estate buying a duplex all cash.
You wouldn't create that video.
I've made a couple dozen on how big a mistake that would be.
Right.
Mhm.
Literally, it's a huge mistake. I would never recommend doing it when you're in growth phase. So the takeaway from that video was to watch, to be entertained, to see, okay, they're in that sphere. I don't invest in 5 units or more. So they know if the pain's coming, and then they say things that logically make sense. Adjustable rate debt. Interest rates have tripled. Loan reevaluation periods. Rents aren't spiking the way people expected because they did for 2 years. They didn't the next 2 years. Like, you put all of these together and I go, okay, there is absolutely going to be a lot of pain. There are people in position to benefit from that. It's not me.
Yeah. Okay. Matt, one of the things that you and I have done, I don't think Dion's done one of these yet, is 1031 exchanges.
Mhm.
I know you own a lot of resi on 30-year debt.
Mhm.
I mean, have you even contemplated taking one of your smaller units and going, you know what, could I 1031 into something bigger, or not really?
Yeah, I'm taking the 3 single families that I own. I'm selling those. I think the market largely is capped out on those, and they might increase, blah, blah, blah. But you know, the amount of rent that I make on those is nothing compared to what I would make when I can turn that type of an asset into a 5 unit or a 4 unit or a 6 unit or something like that. And having held those, I've always held those as kind of trading cards. You
Right.
know, it's like they're the most predictable asset by far. And you know that no one is making more entry level homes. And so I've always held a few of those assets. And I think now more than ever, when they're not creating that stuff, or the new stuff that they're creating is, 650 and $700,000. I'm more than happy to part with that house at 450 that I paid 150 for, but I've been paying it down for 20 years.
Mm.
And so, at that point, I can 1031 exchange that, make a whole lot of money, and be able to go buy a 10 unit and have improvement money ready on the side. So
Yeah.
there will be a shifting and trading of assets in all likelihood. Because I only kept those, based on the fact that I knew I could trade out of them. But the small multis, it's like I've been banging that drum for 2 years. Small multifamily, 2, 3s, and 4s, they do nothing but go up. They fly off the market every time. They're still going at 5, 7, 10% more expensive than what they're being listed for. Even the small 8 and 10 unit stuff. I remember and Grant recently had changed this. He said, look around your town. There's 16-unit buildings all over the place that you can buy. You buying those anymore, Grant?
Mhm.
No, he's not. But he wished they were 4.4s,
Right.
because those 4.4s have gone up a lot more than that 116. So yeah, I mean, for me, I think it's, again, this is asset management, not just property management.
Mhm.
I've got some assets that I'm going to trade out of. I think you'll do the same. And we'll trade into bigger, better stuff and kind of see where that goes. But the best thing about my portfolio is 85% of it is fixed rate debt. It's the
Yeah.
best
Don't
part.
have to. Yeah.
You don't have to. If
Yeah.
if they don't sell, or if I don't find the right thing, okay, bye. That's fine.
Yep. Yeah. Yeah. I think if you guys read my book, One Rental at a Time, you'll know that one of the best moves we ever made was selling our houses at the peak
Mm,
and 1031ing into apartments. And then, if you complete the story, you know that we bought a lot of houses and resi stuff during the crash. And I've always looked at those kind of like trading cards, like, oh,
yeah.
I know what I'm going to do again.
Mhm.
And yeah, I don't think there's any question that sometime over the next, I don't know, 4 years, we get out of most of our single family homes.
Now, so let me ask a question about that. So you got the single families that last time you went from 8 single families to 80
Mhm.
units.
Yep.
And now we look at it and you say, okay, now is probably the time to, again, probably make that same type of a swap.
Mhm.
But the massive deals in the market aren't going to be on single families. They're going to be on 10, 12,
Yeah.
20 unit buildings, right?
Oh, absolutely. I mean, it's just like last time.
Yeah.
Houses were sold at the peak. How do I know it was the peak? Everybody who bought one lost it, right? I mean, I can go back and look at Zillow and see the foreclosures. And this is really the last point with Ken that I'll go to before I answer the question. Ken McElroy is really highlighting, really Grant too, that any deal flow right now is Class A. Class A is the only stuff trading right now. So that's the only stuff that's kind of bankable. Where we're seeing probably going to be the most pain, but it hasn't shown up yet, is Class B and Class C. Because a lot of that stuff got repriced at Class A levels, 2 years ago. And there's some very large haircuts coming, but we have a little bit of extend and pretend. We're getting additional years. So we might be 18 months out from Class B and C trading. So that's when when that happens, when Class B and C get repriced, that's when I start selling singles, because again, I think singles probably have another run in them if rates go lower. And I just sell at the peak and trade into a depressed asset, just like we did last time. Oh, Matt's on mute, I think, because I can't hear him.
Sorry
Oh,
with the coughing. I think that's right. I think that's what's going to happen again. And I think and will it be houses going down 70%? No, of course not. But they're still going to come off the peak. That's what they will do. They will come off the peak. And the question is of the timing around all that. This is horseshoes and hand grenades. This isn't sniper shooting.
yeah,
Like,
it's just got to be close.
Yeah, just got to be around the right time, not even at the right time.
I love that. I love that. Guys, I have a quick video I want to do after this one. So where can we find you, Matt?
Lumberjack Landlord, YouTube and Instagram, 11:30 a.m. Sundays is my live stream.
Dion?
You can find me right here on YouTube, Dion Talk Financial Freedom, trying to resist the urge of following in your footsteps and selling my one single family home and 1031ing into something that makes more sense. Because
I heard that last night. I called it out in the comments. I heard it. Dion is talking about relevering. Just saying.
Just saying. We knew
Better-
you and I both knew that was coming.
Better late than
You
never.
could find me here trying to resist the urge.
He's fighting it hard.
It's
Yeah.
uncomfortable.
I understand.
Enjoy the process, Dion. It's cool on the dark side. You'll be all right.
It is.
Thanks, guys.
See ya.